Hi, I'm Brad Rosley. How are you? Thanks for tuning in again today to Smart Money. Today I'm very excited to revisit something I've talked about in the past, and I'm bringing it up again because it's made me a ton of money, and I think for you, if you listen to what I have to say, it could very easily make you a lot of money also. The topic is health savings accounts, also known as HSAs. You can possibly set this up if you have an employer-sponsored health insurance program or you have to buy insurance on your own, as long as you have what's called an HSA, health savings account in your insurance package that allows it. So your insurance has to allow you to have an HSA qualified plan. With that plan, the number one thing it's going to ask you to do is to have a high deductible plan. Now, I know some of you aren't comfortable with that. You think a low deductible on your health insurance is very important. I tend to differ with you. And the first thing you should know about is insurance companies, insurance in general, you want to self-insure for all the little things. You want to insure or transfer risk for the potential big pocket expenses as much as possible. So the way to save money on your health insurance is to self-insure and have a high deductible, because that will help you to have a much lower insurance premium. So for example, when I moved over to a high deductible plan with Blue Cross Blue Shield, is where I started doing it. I did that, and my family of five, our deductible went from $500 to $10,000. You may say, holy cow, how did you go from $500 to $10,000? How could you do that? Well, it saved me in premium from $1,200 a month premium to $500 a month premium. So my savings was $800 a month in premium, which I turn around, I take the $800 and I saved it in my own name. So then if I did have an expense, if something did come up, a large ticket expense that I had to pay for out of my pocket, I had money to pay. Instead of giving that money to the insurance company, I gave it to myself. And if I needed it, I had it available. Now, the next step is to take a good portion of that savings, or all of it, depending on what your savings actually is, and fund a health savings account. There are many institutions that allow you to do this. I happen to use a company called HSA Bank out of Sheboygan, Wisconsin. So what I did was I did this a number of years ago, the maximum allowable contribution and put it into my health savings account, and I used my premium savings that I now had from taking the high deductible program, and I took that and I put it away in this special bank account called a health savings account. At the time, I could only put in $6,000 a year, so $500 a month. I set up an automatic deposit from my checking account into the bank account. And from time to time, I used that money. Like I said, I had 3 kids that were growing up. Every now and then they needed it. I'd use it to pay for a checkup. I'd use it to pay for a dentist appointment. Luckily, I have a pretty healthy family. One time I needed to use a lot of it when my daughter broke her arm. So I used up a good chunk of my savings to pay for the doctor's visit and the cast and the x-rays, etc. But even after paying for a broken arm and the expenses related to that, I still had money left over in my premium savings in that one bad year. So what I've been doing is setting aside this money. I try not to spend any of the money in the HSA account for 2 reasons. First of all, what I forgot to mention a moment ago is the money I put into the health savings account, I have a tax deduction for that amount of money. It started off when I started doing this plan, I could put $6,000 away. Now I'm up to, because it's a family plan, I can put $7,100 away, plus another $1,000 because I'm over 50. If you're single in 2020, you can put away $3,550 in 1 year. It'll go up to $3,600 next year. If you're married, you can put in $7,100 a year this year. It'll be $7,200 next year in 2021. Plus, there's a bonus $1,000 you can put away tax deductible if you're over 50. So you have that money available that you can put away and get the full tax write-off for that. It comes right off your tax return, assuming you have a qualified high deductible medical insurance plan. Now, I try and never spend the money that's in my HSA account. I'm using it as a retirement plan because I think when I get older, I'm going to want this money for other healthcare related expenses. Now, the HSA account that I use is kind of a checking account. I actually have a debit card or a checkbook, both that go with this that I can use to pay the doctor's office. But I would rather not spend that money because what I do with the money that goes into that HSA bank account is I transfer out all but a little bit into a brokerage account at TD Ameritrade that is aligned with this HSA bank. So I transfer the money out online very easily, no cost. And then what I've been doing is buying different investments, long-term, high-growth investments for money I don't think I'm going to be using for many, many years. And I've been doing this year after year. I try not to spend the money in my HSA. Why again? The money that I put into this program, believe it or not, all the growth, it's not taxed. So when my account balance was going from $5,000 to $6,000 to $10,000, etc., no 1099 in the mail, no tax. Kind of like an IRA. And then when I go to take the money out, well, if it's for a qualified medical expense, there's no tax for that either. If I wait till I'm older and I use it for a knee replacement or something like that, no tax. So that almost makes it like a super IRA. There's a number of things that are listed on the IRS website that shows you, and I'll have a link in my bio for it explaining under the video what's qualified as an expense. It's a long list. You can go see the chiropractor with that money. You can buy prescriptions with that money. You can do a lot of things with that money and never, ever, ever pay tax on the money. Worst case is you'll pay a 10% penalty over and above ordinary income on the growth of that money if you take it out for something that's not a qualified expense. I don't anticipate doing that. If I do need the money down the road for something other than medical expenses, I pay ordinary income tax after age 65, which is a lot like an IRA. So I love this program. How have I done with it? Well, I actually have my statement here from TD Ameritrade. I'll hold it up like this just to show you that this is my actual statement, okay? And if you pause the tape, you can see the video of exactly what I had. And for example, my current balance now, as of the end of September 2020, is $138,000 in my plan. That's right, $138,000. Well, how did I get to have so much? Well, A, I put money into it year after year. B, I seldom take money out. And C, some of these investments I've put it on happen to have done very well. I am a certified financial planner with a financial advisory business, helping people grow their money. Some of the stocks I've picked in it include Tesla, which I put $14,700 in. It's now worth over $42,000. That one helped. I bought money in Amazon. I put $4,000 in Amazon. It's worth over $15,000. Apple, I put Apple stock. I put $5,300. It's worth $23,000. So some of the stocks I picked long term have done very, very well. I'm sure not every one of my stocks has gone up that much. I also own some mutual funds in there as well. But my point is, this is a great long-term savings vehicle. I love it. It grows, no tax. Tax deductible going in, tax deferred while growing, and tax-free distributions if used for qualified expenses. So go ahead and take a look at this and other videos I have on my site. I really hope you give me a like, a thumbs up. Watch some of the other videos I have on this topic and a number of other ones. If you'd like to save taxes, I've got a number of videos on tax savings. I also have videos that talk about investment plans, ways to grow your money, ways to have a better life. I am a certified financial planner. Like I said, my name is Brad Rosley. FortuneFinancialGroup.com is my website. I work with clients all over the country as we work virtually via Zoom and face-to-face with people in the Chicagoland area. I really hope I can help you. I've also written a book called Beyond Money that's available on Amazon, and feel free to take a look at that. You can download it or buy the paperback copy. Thanks a lot for listening. I hope you have a fantastic day.